Hey everybody, I am back for TradeGiving, and this is awesome. I was part of it last year, and it was a lot of fun. And when Jeanette asked me about coming back this year, I was very excited because she puts on a great show. There's a lot of great speakers. I've met Johnny before. He's awesome. So for me to be part of it is a lot of fun. Before I go any further, the disclaimer slide. I always have to show it that everything is for educational purposes only, not advice to buy or sell. Past performance, no guarantee of future performance. Trading is risky. You can lose all your money and then some if you don't understand what you're doing. All right, so that's out of the way. Now, we are going to talk turkey about some trade ideas. And Jeanette asked me to come in, I think it's about 3 times a year. And as she said, you guys have asked for me to come back. I give you guys trade ideas. We say we're going to watch them, and we're going to see how they're going to do. And not everyone's going to work, but the accuracy of what I give you has been, oh my God, literally everyone seems to work. So we're going to talk about that today. I'm going to send you guys home with a ton of trade ideas. I know some of the emails they sent out said top 10 stocks. I'm going to give you more than that. I'm going to over inundate you with ideas between now and year end, and also the new year. And what I'd like to do is to start off the presentation by sort of asking, this one question, because we are on Black Friday. It's a holiday weekend here in the US. And, we all want income. And we might have taken some time away already, maybe yesterday on Turkey Day or this weekend, and trying to find the top trade ideas walking into every single trading day. So we're going to maybe take time away from spending with our families, maybe from playing golf or going walking a dog or fishing, whatever it might be, personal time, because we want income. So you're going to hunker down, do all this due diligence, this research, and you're going to narrow it down to maybe 1, 2, 3 picks. And then you have to decide which one are you going to do, because you like them all, but you don't know. And then you narrow it down to that one. And then you say, you know what? I think this one is going to have a great chance to do X, Y, or Z, go up or go down, like you won. But you know what? It's still a coin flip. Just because I liked it, it's just a coin flip. We don't know. So what I'm about to show you in 2 clicks of a mouse does literally change that, because we're going to use a stock's own track record as our secret weapon. And it's all based on fact. And that's what's really going to set us free, give us a lot more confidence in our trading. So here's what we do. We go to financial, and we can type in any ticker symbol to get inside. Let's just say we type in the S&P ETF, the spiders. Now at this point, once we're inside, we're going to 2 clicks of a mouse. That's all it takes to see proven trade ideas. We're going to click on screen, and we're going to click on seasonality. And when I scroll down a little bit, you're going to see that the software is looking for stocks that are going to rise at least 5%, which is what I have it set to right now, over the next 5 weeks. I'm talking to year end, with a historical accuracy rate of 70% or better. That's it. And when I scroll down and I show you these trade ideas, this is what I do for you every time I come in. There's nothing different. I should have asked before I started how many of you guys have seen me before, or maybe this is your first time. This is it. This is how I come to you and I talk about Disney, Gold, Netflix, Domino's, how over the summer it was Intuit and MasterCard and Interactive and so many of these other companies. And, like Jeanette was saying, it's like, dang it, then you wait a couple of days or a couple of weeks and up they go, or down they go, depending what we want. And it's just, we really have to shake your head. So, the question is, well, why, how, and really? Are you like serious? And the answer is yes. So if you look at my screen, you guys are going to see 5, I'm going to circle them, these first 5 columns. Now, those first 5 columns is data. It's one 4-letter word, DATA. Forgive my Pennsylvania chicken scratch. It's just data. All we've done is go buy data from like the CBOE, from Morningstar. We crunch this data. But you saw what I did. 2 clicks of a mouse and boom, there it was, right on your screen. All we've done is number crunch. Nothing special, no secret sauce. So when I say to you, hey, the first ticker symbol is Copart, and it typically rises 11% going into year end, and it does so 76% of the time, that's not me telling you. That is the stock telling you, no joke. this is what it does this time of year, 3/4 of the time. If you go to AAWW and it's a 9% rise, 86% of the time, like, are you kidding me? I'm not telling you that. I'm just reading the screen. This is the stock, literally. No joke. I know it sounds hokey, but it's the truth. It's sitting on your shoulder, whispering in your ear saying, hey, by the way, this is what I do this time of year. I mean, wouldn't that be fantastic to know? It's what we've always wanted. Hey, stock, will you tell me what your tendencies are before you actually do it? Guys, this is what we're looking at. Now, you might be thinking, really? The answer is yes, it's just data. So if you're an engineer, if you're a scientist, someone who just likes facts and not opinion, this is the fact sheet. Now you might say, all right, let's say I believe you. It's just data. There is no believing. It is fact. But anyway, why does this happen? Why would these stocks seemingly do the same thing each and every year, or the majority of years in a decade? And it really comes down to just two little words: big dollar bills, big money. You and I, if the market actually is open today, if we all right now, unless there's some big institutions here, let's assume they're not, let's assume that we're all retail traders. If we all went in right now and tried to buy 100 or 1,000 shares of SBGI, we might make one block trade on the CNBS ticker or the Bloomberg ticker, and then we're done. We are insignificant for the rest of the day. We just don't count. We don't have the firepower. We don't have the money. So then how could these stocks, some of them have been publicly traded 10, 20, 30, 40, 47 plus years in the case of Walt Disney, how could they have these type of records? And now you see, it is the big money. When these guys come in, they're like the elephants in the room. They can't just buy today and put their full position in. They're going to move the market. They're going to end up bidding against themselves, and they're going to force a higher price. They're going to cause that stock to surge. So they're going to have to layer their positions in over, hey, a little bit today, Monday, Tuesday, Wednesday, Thursday. Over time, it may take days or a week or two. Then, as the stock begins to go up, they have to start selling. Then the stock goes back down. And what we're going to do is we're going to target that window in the center. That's what we're going to go after. We're going to know the time window they do it. You're looking at it. And then we are actually going to be able to see the moment they begin to leave, or they start just doing nothing with it anymore. And it's going to be a proverbial treasure map or a GPS for your stock. All right. So now we know that what we're looking at in those 5 columns I circled in blue, it's just data. It's facts, period. Indisputable. We also know what causes it: the big money, the institutional money. But how do we know that these stocks are going to do the same thing that they did last year, the last 5 years? I mean, isn't past performance no guarantee of future performance? That's true. We can't guarantee anything. But if you do the homework on your own, we're pretty much at a 50-50 coin flip. We now see we can do better than that using the stock's own track record. But can we do better? Is there a way that we can cull the herd further and only pick out the shiniest apples on the tree? That is where this column on the right appears. This is the stock score rating. So the blue columns, just data, and you can use just data. If you allow me and our team's experience in the market, I've been doing this for 20 years with the markets. The stock score rating is made up of 4 pieces of data points. We take in F for fundamental analysis. This is, for example, could be things like the earnings report, the balance sheet. What could we find out? Then we take into account C for chart. Now we're talking about the technicals. It could mean things like candlestick patterns, moving averages, things of that nature. We then take into account sentiment. That may include analyst upgrades, downgrades, options, open interest. And then we bring in the 4th piece of the pie, the seasonality, which are those 5 blue columns. We put all 4 together and we get a stock score rating of a buy or a sell. So if you said to me, Ron, can we look at the hottest stocks for the weeks ahead? Boom, you're looking at them. And then we take it a step further. Let's get rid of the ones that, hey, these little turkeys like AAWW, look at that sucker. 86% of the time it goes up. I mean, that would jump out at me as a big one, right? Almost a 9 out of 10 years it goes higher this time of year. That's crazy good. But you know what? This is the one year it may not live up to that. Why? Because the fundamentals, the chart, or the sentiment, something is wrong and it's outweighing the seasonality. So we want to get rid of that one, and we want to get rid of that one and anything else that's rated a sell. So here's what we do. I'm going to erase these drawings. Go back and get my little mouse. We're going to scroll up. And then we see this advanced filtering. We're going to hit that drop down window, and we're going to say, I like to joke about this. I don't want to get sued by Amazon though. Hey, Financial Alexa, can you please show me all the hottest stocks for the weeks ahead? Check. But also only the ones that are rated a buy by your algorithm. So we still look at seasonally strong stocks, but cull the herd for me. Get rid of anything that looks like it's having trouble right now. So you put your stock rating to a buy. The moment we do that and we scroll down, now these are the hottest stocks going into year end, which is only 5 or so weeks. That's it. You're looking at stocks that go up at least 1% a week, which is huge. You start approaching 2% a week, that is crazy good. In fact, not only this, we could say, can you show me the hottest stocks to even kick off the new year with a bang? I could move this out to 13 or 16 weeks and watch what happens. Now all of a sudden a new group of stocks appear. Now you start talking about Netflix, which is one we're going to talk about. That is an absolute rock star. After we look at some of these trade ideas, you might start naming your pets after them. That is how proficiently awesome, good that these little suckers are. It's stunning. So let's go back to the 5 weeks. I said we're going to talk about going into year end. So now you have shorter term, you have longer term. At this point, now that we've picked out some of the best looking stocks, how do we know which one to pick? And the answer is, do you see something on here you like to trade? Do you like Mosaic? Do you like XPO for transports? Maybe you like Trex or Copart. You can trade stocks that you're used to, maybe something that's in your industry or your sweet spot, something you like. Maybe you're into gaming or something, whatever it might be. That's what I would do, because if you trade the same stock over and over again, you develop a little bit of familiarity with them. You know how they typically act. That's always a bonus. You could also just come over here and say, well, we're going by percent increase. What about if I go by probability of increase? Can you show me the ones that really light it up this time of year in terms of accuracy? Well, we can do that too. Just sort by that column. Now, BCO, which is Brinks, is your number one for the next 5 weeks. 84. That's over 8 out of 10 years. As I show you more of these trade ideas, I want you to keep this in mind. The market usually goes through a big correction, a sell-off, once a decade. You start seeing stocks that get into the 80 percentile or 90 percentile range, and you think about that and say, wait a minute, this company's been publicly traded for 2 or 3 decades. They're 85, 90% accurate historically during this specific time frame. Well, you start incorporating that 1 year they lost per decade, and all of a sudden you start coming to this realization, wait a minute, are you telling me that unless the market is crashing, the other 8 or 9 years in that decade, all these stocks do is go up? I'm not telling you that. The stock is telling you that, and bingo, that's exactly right. Now here's what I do. I will sort by both columns. I do like the fact of BCO being so high, but we can also go by percent increase and just go after the biggest winner, because we want to be greedy little piggies. We want to go after the biggest bang for the buck. Copart is 11%, BCO is 7%. Copart goes up 50% more, same time frame. Let's go look at both. So let's start by looking at Copart. At this point, we can scroll up, click on search, click on seasonality, and we can type in CPRT. And when we do this, we scroll down, we're going to have access to 2 sets of charts. There is a solid line that's called historical data. This is just giving you a visual representation of what the stock has done. So it's a line chart on purpose. It's like, oh, we had the Corona crash, then we had the rally. Looks like we're at new, yearly highs. And then the right, this is where the action is. This is the future probabilistic price. Now, we're not predicting the stock can go there. That's not what this is. This is saying that, you know what? If this stock lives up to its historical averages, what you see is how the big money pushes your stock up, down, or it has no interest and it goes sideways. Further, if we go down on the page, you would say, well, how long has Copart been publicly traded? Maybe you don't know what they do and you're new to this stock. And then you would say 25 years. I mean, that company's as old as Jeanette. That's it, 25 years. But think about that. 25 years. That's different presidents, ups and downs in the stock market, different wars, right? And this is what they do. And what I see on this screen, if I get my little pen out, is I see an uptrend. Then I see a sideways trend. And when I see things like this, it might start putting thoughts in your head, which I would say are spot on. Why would you hold a stock for a whole year if you knew there was only one window of time when the big money pushed it? Wouldn't you rather take your money and go from here to there and here to there on stocks throughout the year, going with the big money instead of fighting it? That's what I would rather do, and that's going to be the point of this webinar. So let me get rid of all these drawings and take my mouse and start bringing it down week by week. And what do we see? 76% of the time, Copart goes higher into December 30th. Does it get any better if we were to hold it longer? It's set. Oh, look at that. If I hold this stock into February, 80% of the time, 84% of the time. So now you're talking about 8.5 years out of 10. That means one of those decades, it had a 9 out of 10 winning streak, and it goes up 1% a week. Wow. So if you thought about being bearish on Copart, history says you're going to get hoof prints on your forehead this holiday season. This is not the time to be bearish on Copart. This is clearly when it starts running. Now, if we go to a chart, now I'm going to use Thinkorswim. I've used TradeStation, Tastyworks. You can use whoever you want, Interactive Brokers. The brokers are relevant. The software is on our server. So we can type in CPRT. And what do we see? See a stock that had an uptrend, it's pulling back, and now it looks like it's starting to bounce. The orange line on my screen, this is a moving average that you can find on any brokerage account. It's a free moving average, you don't pay for it. It's called the 50 day simple moving average, otherwise known as the 50-day MA. This is an institutional moving average, and it's remarkable. I don't give it that name, it's given by the trading community. So if the big, call it the world of trading community, watches this line, and it's called an institutional moving average because the institutions will pay attention to this, then it's a big deal for what we're doing. Stocks that are above the orange line are viewed as institutionally bullish. Stocks that are below it, well, you guessed it, it's institutionally bearish. Right now, this stock is now starting to bounce a little bit. This would be a trade idea to keep an eye on, because now that we're entering this seasonally bullish period, and ironically, it bounced right off of it a month ago. Very, very interesting. And you will find that as we go through these stocks, we're going to do about probably 5 more trading ideas specifically. We get near that moving average and we bounce, it just leads to an explosion. If we are below it and we get above it, it leads to an explosion. The proof is just going to keep hitting us right in the face like, oh my God, when these stocks hit that moving average or break it during that specific window of time. Now, I was doing a couple events with Jeanette last week, and I gave you guys trade ideas. You know that they're already working just from a week ago. Here is one that if you saw me last week, you did not see a specific example of, but this would be one to keep an eye on now. As long as we stay above that orange line, it's fine. We get below it, the trade would just be dead. Now, there was another one we looked at. Let's go back. We talked about, actually 2, SBGI I mentioned. This is a trading idea that I gave you last week, just a week ago. And this stock, if we go 1 week, 2 weeks, 3 weeks, 4 weeks, you can see it stays at 75% of the time over 6 weeks. This goes right into the first week of the new year. And I gave you this one last week, a week ago, and I said, watch this stock. And I take you to a chart, and look what happened. All of a sudden, the stock starts exploding, and this is a daily chart. So I keep notes on paper when I come in for Jeanette and I talk about different stocks. So this was on Thursday, a week ago, on the 19th. Let's move our mouse and let's go find the 19th. 13, 14, 15, 16, 18. Here was 19. The stock closed at 26.06. You know, it's up, what, about $2 since then. That's 10%. If you're a stock trader, in a week, you made 10% if you just followed along. But here's what I want to show you, that if you see me in some presentations, I call this like a grab the popcorn moment, or you're going to shake your head in disbelief because you're just not going to believe it. I want you to look at this chart right now. This is a 1 year daily chart. So 1 year worth of data. And this is the Corona crash, right? But look at this stock for the whole year, basically from May right to November. Did you make any money on that stock? No, not really. Actually, there's a really good chance if you bought this, you didn't make squat, or you might have even lost money during that window, depending the price you would have paid. And then I could come to you, which would almost sound very arrogantly, and say, you know, yeah, don't trust it all summer long. But I'll tell you when you can. I want you to go to November, and this is over the summer. Go to November and wait. Just like I told you last week, wait for that November and watch what happens. This stock is just like, you know, watching paint dry. And then magically we enter this window and the stock just blows higher. Look at the volume coming in. The volume starts to rise. Volume equates to bigger money. You and I can't cause that. When these stocks enter their seasonally bullish windows, they explode. When they go from below the orange line, that 50-day moving average, to above it, which it did, right there, what do you know? There it goes. Let me go erase these drawings and zoom in. Look at how this stock in September, lower. This little sucker, even, I'll call it a turkey due to Thanksgiving, this little turkey even had earnings earlier this month and it went down. Like, you've got to be kidding me, right? So it had earnings that morning and it still went down hard on big volume. This is going to be a theme in some of these examples. Jim Cramer said on CNBC, on air, not that he did it, but he was aware of it, that the big money previously would call up news reporters and say, XYZ on the stock, it's bad news. Oh, blah, blah, blah. They made it up. I mean, that's illegal. They would make it up. They would artificially push the stock lower so they could buy it up right before they really wanted it. Look what happens. Earnings reports, we were always told, were fundamental updates on that company. And they sold it from 19 to 18. That's a huge move on a $1 stock. That would be like a $100 stock going to 90 in a day. That's a big deal. And the volume picked up. It's like they shook the lemmings from the tree. They make fun of us retail traders all the time. We're the lemmings. They shake us out, and then magically, look what happens. November is a bullish time for this stock historically. It pops the orange line at $20 and about 50 cents. And now it's at 28. Guys, that's over a 40% move in 3 blanking weeks. And you might say, well, geez, Ron, you keep talking about this 50-day, this orange line, that's institutional line. We get below it, we jerk back above it. We jerk below it, we get jerked back above it. We get below it for 1 whole day, we get back above it. This doesn't work. Listen, it's not about working all year. It's about what happens when the institutions cross their own line. It's their own moving average. And you know November now, and you knew it a week ago. You knew it a month ago if you did the scan. You knew the moment the sucker crossed that orange line, it was game on. And then just like that. So it's like if someone didn't know about seasonality and the power of big money, they would look at this and say, that line never works. This is crap. Yeah, until you enter the window, and then it's the money line. It pops and it goes. I gave you another stock last week, which was BCO, which was Brinks, just a week ago yesterday. Look at Brinks here. Watch this. I'm going to pull this over to get rid of this line a little bit. And now we can see I call it the treasure map, the GPS line. Basically, the whole year, Brinks is dead money. Now, that does not mean it can't go higher or lower. What that means is you don't have the big money helping you. How many times have you bought a stock and then it stopped going higher? The charts looked amazingly strong and then it just dies because the big money is what moves the markets. Then it just goes into chop suey city. It goes nowhere. Now is when this stock starts to rise. Look what happens if we go out a year, all the way over to the right side of the screen. There was the low, and then it starts up, just down a tad, and then it starts going right back up. We are in the window of when Brinks runs. If you move your mouse over Brinks, this was one of the highest performers on a percentage basis, right? We went up as high as what, 84%? Right there. 5 weeks, 7% move. That's almost 1.5% a week. That's huge in such a tight time window. More than 8 out of 10 years. And then if you come down here, you see Brinks was also 25 years publicly traded. This is a big deal. So when I was with you guys last week, I said, hey, just like I'm telling you Copart now, here's BCO. It's like, oh my goodness. Oh my goodness. Look, this was the Corona crash. It's been chop suey city the whole time. We're above the 50, below the 50, above the 50, below the 50, above the 50, below the 50. Completely worthless. And then you hit November. Look at how that volume all of a sudden comes soaring in. Now the green volume in the bottom of my screen, those are up days. The red volume is down days. Look at how that just starts going crazy high. And just like that, look what happens when we cross the orange line. There's a huge explosion. So let me delete all these drawings and let's go ahead and zoom in just so you see the magnitude of this move. Look, above, below, and then right before the rip, another earnings report, and they are tanking it right on cue. I don't know if they're just selling it on purpose to get more people selling because the volume spikes. You're going to say, wait a minute, earnings, volume spike, we're going down to those previous lows or we're going to break them. This is not looking good. But that's not going to catch you. They are not going to trick you because all I'm doing at Financial is showing you fact, no BS, no human interaction, just fact. And you know that, once we go to November, what do? You wait. This is where you're grabbing the popcorn right here. You're laughing. You're like, oh, look, they tanked the stock again. Ha, ha, ha. Just wait. We're going to trust but verify. Just wait. Pop goes the weasel. It pops out of the gopher hole. The stock's at 46 bucks. It was over 70 just 2 days ago, earlier this week. 46 to 70 in a straight line. And then you go back over the year and you say, how could that happen? How many times have you and I traded a stock and watched it go nowhere all blank in year, and then it just explodes? Well, now you know. You go to Financial and you say, well, look, there is no bias for the whole year. I mean, sure, maybe it goes up. Sure, maybe it goes down. But then you're on your own. Go with the big money. They are the ones that move the market. So you come in here and you say, we were ready. This was like the easiest money you could possibly make. I told you guys every year that this is one of the best times of the entire trading year. It is now in November and it goes into the middle of December, and then it reignites like a firestorm in January. So you guys seeing this now, it is the best time of the year. And then you get a second shot in January once we get through the holidays where we go nuts again. Now, at this point, people often ask me, and I'll even tell you my exit system that I would teach you. So you know how to get in. You wait for the window, you see the volume, pop goes the weasel. Once we're above the orange line, the red line's a trailing stop. Until we break that red line, which is a 20-day exponential moving average, you just stay in this trade. I know we're doing it today while the market is open. It's the middle of the day. But what if you're a doctor, nurse, airline pilot, a landscaper, maybe you're in Australia or Singapore, you're sleeping when the US market is open. Maybe you just work night shift and you have to sleep during the day. Or maybe you're a vampire. Doesn't really matter. This is an end-of-day system. There are no alerts. There's no, oh my God, what is it doing in the middle of the day? This is, you come home from work, you have dinner with your family, and you live life. And then when everyone's put to bed and you're chilling out with your favorite beverage, you open up your laptop or your iPad and you say, is my stock above or below the red line? And you're done. If you're below, you're out. And if you're above, you close it and move on to enjoying your life. Because the big money cannot all buy in one day and then sell the next day. They're going to, what they just caused the rip, they're going to cause the drop. So when they come in, it creates this ebb and flow. Follow me? Now, for those of you guys, this is going to be awesome. I got the chat box. I have a question, and I really want you to answer this. What is the one stock I told you guys about? Now, Jeanette, I've known Jeanette and Hubert a long time. We usually end up meeting in Vegas. And we've been doing this since 2019 with you guys. What is the one stock I pound the table on every November? Do you guys remember what that stock is? Andy, you're jumping ahead. That's January. We're going to get to that one next. Andy's like, Netflix. That's January. What is the one stock? It's magical. It's the Mouse House. So I want to say this to Darwin, Glenn, Jerome, John, and Reginald, and everybody else that's typing in DIS. Did you guys get on the Disney train? Because if I take you to financial, and if you want to have a fantastic conversation this holiday weekend with your families, ask them when they think the best time to own or trade Disney is. Just ask them. And they might say, it's probably the summer when the theme parks are really, really full and the parents are pulling whatever hair they have left out and money out of their wallets that they had, right? The theme parks are insanely busy. Now you could say, well, COVID, not this year. COVID doesn't even matter, guys. It's freaking nuts. Not even COVID stops this. And that would make sense. What I'm about to show you is going to change the way you're going to think about this. If we scroll down, look at this. Disney has been publicly traded as long as I'm alive, 47 years. We've had wars, we've had recessions, we've had Democratic presidents, Republican presidents, we've had aliens in Congress. We've had everything. The dollar, this, that. Remember when debt ceilings used to be a thing? Do you guys remember when Rand Paul would get up there and do a filibuster and stop because of all the spending of our money? Yeah, now we don't even talk about debt ceilings, right? But that's my point. There's always something. Now we even have COVID. Guys, look at this. If you were new to seasonality, you would say 47 years of data? I mean, geez Louise, it's probably going to look like this. I mean, there's not really going to be a bias. But what do you see on your screen? It's just the opposite. There's a monumental bias. Look at Disney. We're starting in November, all the way into May and June. This thing goes up 47 years, and we're not talking about it going up just a couple percent. This is some serious real estate on the right here. And then look what happens when we get to the summer, when you might think the theme parks would be their fullest. The big money is laughing at us retail investors saying, yeah, you can buy Disney. We're going to just sell it to you because you're the sucker. I like playing poker. It's actually very similar to the stock market. But they often say that if you don't know who the fish or the sucker is at the poker table, it's you. It's hilarious, right? Look at what they do to Disney. Well, if I erase these drawings and I take my mouse, we can go week by week and see how they push Disney. Over the next 11 weeks, 9% rise, still on top of what we've seen. 82% of the time between now and February, guys, this is 8 out of 10 years in 4 decades, 4+ decades, and this is its average. 80%, 78, 74, 74, and then we're going to go back into the 80s, 80% even into May. This is craziness. So if this stuff works, let me type in Disney. I should be able to prove this to you in spades. Now I'm going to do this pretty fast, but watch what happens if I take us back to 20, where are we going here? 2016 is here. I'm going to zoom in purposely right here. This is the summer of 2016. That's when we brought financial public so people could actually use our service. And Disney just kept going lower and lower and lower. Now, Disney bought Star Wars from George Lucas for $1 billion with a B. And something that Kramer said that I talked to you guys earlier about is seemingly negative news comes out about these stocks. Same time every year. It's almost like to artificially depress the price so they can go buy the shares at a cheaper price. It's a joke. To me, it sounds like pure manipulation. Here's Disney. And what did I tell you guys? When these stocks enter their seasonally bullish window, you're going to grab the popcorn, kick back, and just wait. And the moment these turkeys cross that orange line, watch what happens. Ready? Down, 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 down. Whoa, pop the orange line. Let's zoom in closer. We pop the orange line, and this thing goes from the low 90s all the way up into the teens, 113, 114. And it stayed above that red line the whole time. So somebody said to me 4 years ago, wait a minute, Ron, if we follow your seasonality data, I'm like, well, it's not mine, it's just data, to be clear, it's fact. When the big money comes in typically to Disney in November, I would have held this stock for like 5 months. He goes, I'm a swing trader. That's too long for me. I said, what do? Hate money? I'm like, that's so silly. All it did was go up. All you did is come home from work and say, above or below the red, above or below the red, and you close your laptop and you're done. Here's what's even more astonishing. When I started learning about trading 20 years ago, I was always told that fundamentals matter. When a company has an earnings report, that gives you the fundamental update and the health of the company. That is what drives share value. That is the biggest bunch of crock I realized I've ever heard. It doesn't matter what the earnings reports are. It's irrelevant. If making money really mattered, Tesla would be at about $10 a share. It's what is the big money going to do to that company's earnings report? Because, as what's probably happened to you, how many times have you heard a company come out with fantastic earnings? They raise their dividend. They do buybacks. They get analyst upgrades and downgrades. They announce a new product that's going to do this or do that, and the stock goes down. What you need to do is go to financial and see what the big money does. Earnings reports 100% factually have earnings biases. How could the companies know every fall that there's going to be a positive reaction? It's almost like you have a crystal ball to a point. Well, you would go to financial and say, holy crap, there was an earnings report. There's an earnings report. Guess what? The fall and the winter earnings reports on Disney usually go higher. Disney's summer earnings reports, they usually result in the stock going lower. Even if the stock goes up over the summer, there is virtually zero follow through because the big money is not there to help push it. I'm not just telling you that. Look at the line. The line is indisputable. It separates baloney from fact. So we come back here to Disney and we're like, wait, look, let me zoom in closer, guys. So this little telephone, that is Thinkorswim's earnings. They're telling you, hey, this company has earnings this day. Look at this day. There was earnings after the bell and the stock pops higher. This is going to be a theme. Look, volume rise, volume rise. Earnings, mega rise. Now, wait a minute. It's almost like the big money knew what they were going to do before they did it. You think? Of course they knew what they were going to do before they did it because they're the ones that are causing the move. 47 years and the stock usually goes higher. So up we go. Okay. So now I slide over here to the right. This is the next year. Look at the summer again. Look at November. Pop goes the weasel. Well, somebody said to me over the summer of 2017, well, Ron, look, it's ripping higher. My reply was, yes, Disney is going higher over the summer. And then they said, but Ron, you said at financial that it always goes down over the summer. I'm like, no, I never said that. What I'm showing you is what the big money does. An aggregate, the big money pushes it lower. Therefore, what does that tell you? If there's a breakout over the summer, it's probably going to be shake the lemmings from the trees, lure the sheep to their slaughter. They're about to do a pickpocket on you. That's what I said. So I did a members webinar beginning of August before I went on vacation. I come back from vacation, the stock's back down here. The members are writing into me saying, oh my God, that looked like such a beautiful breakout on good news. This stock was probably going to go back up to the highs. And I said, don't trust it with a 10-foot pole, even if there's a big bucket of ice cream on the end of it. Do not trust. No touchy. If you would have bought this breakout, 110, fast forward a month, and you're at 90, what, $6, you would have gotten fleeced. Instead, you knew to avoid the summer trap, come over here and say, here comes November, baby. And just so y'all know, there's only one time of the whole year I look to trade Disney. November. The rest of the year, don't care. It's November. And there are stocks like this every single week, every single month of the year. We become very surgical with our money. No more buying and holding for a whole year hoping to catch a move. We just want to know what the big money is doing. We can have those fundamental plays. If you want a marijuana stock, hey, knock yourself out. I just like money. So look what happens. Below the orange, pop the orange, and just like that, we explode. Let's zoom in again. Here's the earnings report over here. The stock went from here to here. Look what happened on the 2 days before the report. Magically, the volume spikes. Well, that's not you and me all getting together on a webinar hitting the buy button. It's the big money accumulating the position as they're about to do it. And look what happens. Boom, there we go. And the stock starts going higher. Now, Disney in this particular year did not live up to its historical average of going higher all summer long. So what do we do in that case if there is a move, but it's not the whole period? We use the red line as a stop, and you would have been stopped at around 107. You would have been in at 100 if you're a stock trader, out at 107. If you're an options trader and you're in over here, 100 to a peak of 110, 111, 112, a 10% stock move means triple digit options. That means if you paid $5 for a long call, it was worth 10. I would love to teach you options because that is where the action is. The options can far outperform a stock move. Okay, so that was that year. Then I'm going to take you to the next year because, again, this crap should keep happening for it to work. Well, what happens in 2018? I was in Vegas for Christmas with some trading friends of mine. They live in Vegas. We were having dinner with them, and it was the worst December on record. But let's just think about this. Before the worst December on record happened, Disney entered November. Here was the earnings report. The stock gapped up on earnings. Let's say you didn't want to buy before earnings and you said, I want to trust but verify. I'm going to wait for earnings to happen. So you get in after earnings. Oh my God, the stock starts dropping. If you would have gotten in at 118, by the time you were at 115, it was below the red line. Then you're stopped out. Here's the 1 year Disney didn't work. Are you okay with a $3 stop out? You tell me, is that getting your butt handed to you? Because you were never part of the worst December on record 2 years ago. You weren't even in it. All right, let's keep going. Let's zoom out. And let's go over here to last year. When I was with you guys, I told you to get ready for Disney a year ago. Look what happens. Here's the earnings report. The very next day, the stock jumps. The day before earnings, the volume spikes. Disney goes from 132 and you're at 153. That's over a 200% return using options. So let's zoom out and go to this year. What do we have? Here's Disney drifting lower, drifting lower. Look, here it even breaks support. At this point, you are going to think that this thing is going to new lows, right? This is awful. Volume's picking up. And the big money starts coming in and accumulating. Bullish engulfing. We pop the orange line right here. Magically, we go higher, pun intended. We pull back. Earnings, we pop higher. And here we go. Look at the option value on 11.6. Remember I told you on 11.6, if I go to analyze on 11.6 on Disney, and if we go out to March, this option would have cost $950. Now there's a huge bid-ask spread there. I'm just going to take the 950, so the results would even be better if it was real in a sense. The very next day, because you were waiting on the orange line, The very next day, that 130, which was a Monday, is worth $17.80. You literally had a double in a day. But you might say, but Ron, hold on a second here. You told us this was an end of day system, and that means we wouldn't have been able to get in. So here's the thing. If you're home during the day, during the last 15 minutes, if you see a stock closing above the orange line, the members know you jump on it. But what about the rest of us? I work from home. I trade from home. We have a baby girl. I'm not watching the market all day, so I may not have seen that. So now you gap up and you would say, well, earnings are coming. Okay, earnings are coming. What did I say earlier? Trust but verify. Maybe you're scared of earnings. Wait till after earnings. Just wait till after earnings. The stock gaps up. Okay, on 11/13, just to prove a point, if I change this calendar to 11/13 and you didn't even get in till that day, the stock was at 138. A 140 long call costs $9.95. Today, that 140 long call is worth $14. That's still a 40% gain. Oh, by the way, and that's even $5 down. You would have been up about 70% just 3 days ago. And I told you this stock a year ago. I told you this stock in August when Jeanette had me in last to watch and get ready, and then you see it happen before your eyes. That's why I said a week ago and 3 months ago, November, guys, it can make your year in a couple weeks. And these trade ideas I gave you guys in August, how many of them are working? Right? Literally all of them. And now we still have till mid-December. And then we have January, which is the mother load. This is great. January's better. It's the mother load because it includes Netflix and Domino's and Adobe and gold. Okay, well, that was Disney. Got to watch my time. Let me show you Netflix. In fact, let me do this. I'm going to tell you, I want you to trust me on this, and then I'll show you the fact. So Netflix typically goes nowhere in November and December. Listen to me, nowhere in November and December. Here's the election. This is not Democrat-Republican thing. It's just a fact. When the president got elected, here was Netflix. Netflix went down. If I show you the S&P 500 when the current president was elected 4 years ago, look what the S&P did. Here was them tanking it before his election. When he wins, we go from here to here. This was a 10% move in the broad market. It was the largest bullish move when a president has been elected ever. That's how crazy bullish this was. Carl Icahn that night said he bought $1 billion in stock once he knew that president won. That guy won. So think of this. The S&P 500 represents the broad market. They say 8 out of 10 stocks follows the major market. That means you have an 80% chance of being right just by picking something. If you pick the S&P, you would have made 10% on your money. So what would you do? Man, I got to find a good stock. The holidays, people watching more stuff inside. I'm going to pick Netflix. So go back to Netflix. We come in here. There's the election, and Netflix drops from 125 to 110. You just lost 10% of your money in a week. Meanwhile, the whole market is exploding higher. And we talk about how bad our luck is. It's like, dang it, how do I always manage to pick the stock that never moves? How comes I always pick the 1 out of 10 that don't go up? Right? Well, guess what? Then it goes back up, and then you get to the end of the year, you bought it here, and you're break even. What do we do as traders when that happens? Oh my God, I'm the worst trader in the world. You beat yourself up. Then you get to the end of the year and you sell your stinkers. You sell your losers. What if I told you, oh my God, what if I told you you only had to go to financial? Type in Netflix. Look down here. This is November. This is December. Guys, into December 30th, Netflix rises 4% in 5 weeks. It only does so 58% of the time. This is telling you there is no bias. The big money doesn't care about Netflix. We just showed you who they're trading. They ain't trading Netflix, and that's not based on opinion. That's based on fact. Look what happens once we get into January. The stock goes through an explosion. In fact, there's something I haven't shown you yet. If you hit best period and we go out 12 weeks on Netflix, Or better yet, let's go out, it's 19 weeks. Look at this. We can do 12 weeks, we can do 19 weeks. Look at that green line. In fact, let's do 12. Yeah, I like 12 better. I think you can see it. Look at 12. It literally starts right as the new year begins. 83% of the time, Netflix goes higher. Publicly traded 17 years. But look at that green. 31.43% in 12 weeks. That's over 2.5% a week, guys. That is monumental. You have 30% moves, you're talking about potentially 3, 4, 500% returns on options. What does that mean? If you paid $5 for the option, $500, 2,500, $2,000. It's nuts. Let's go back. Here is post-election. Ready for January? Watch. Here's January, center of your screen. All of a sudden, Netflix goes higher. They have an earnings bias. It pops, and then it goes higher again. This stock, by turning the calendar, goes from 124 up to 144. You saw over a 20% move in no time. Well, surely that was just that year. I mean, that wouldn't keep happening, right? Look at. Here's Netflix again, October, November. Look how they jerk this stock down for the holidays. This is the next year. They jerk it down. Look what happens the moment we pop the orange line. This stock, January 2nd, first trading day of the year, pops up from going nothing. Look at the volume surge. We go from around 200. Before earnings, you're at 220. You're up 10%, which is nearly a triple-digit option win in a couple weeks. Then you have the earnings bias. Then it goes up. Look at, you were at 200. Now you're at 280. Then you're all the way up at $320 some. This was a 50% move in 3 months. That was almost, I think the number was 529%, or 527 was the long call option. All we're doing is buying about a 3-4 month call option right at the money. Well, that was that year. I mean, this just isn't going to keep happening, right? Check this out. This was the crash during Christmas in 2018 when I said to you guys I was in Vegas. The market was just getting gutted. I was telling a trading friend of mine, what's the one stock we're going to watch? That one stock, once this market bottoms and we hit January. It pops the orange line. You can see it right here. Look how vertical this goes. We get above the orange line, it's 297. Within 2 weeks, it's at 360. 20% move in 2 weeks. And you would say, God, I wish I knew which stock to buy when the market crashed and then it stopped going down and it ripped up. It's Netflix if it's January. It's not Netflix if it's November and December. It pulls back and then it goes up into the mid 360s. Multiple triple-digit return. All right, well, let's keep going. How about last year? It's already above the orange line, and then we still go higher. What about this year? Look what Netflix is doing. Peak, peak, peak. People are going to say this stock is topping out. It's a triple top. It doesn't look that good. We know something completely different. We know that 80+% of the time when that calendar goes January 1, which is in 1 month, this thing becomes a rock star. How about gold? Check this out. There is only one period, and this is so important, you gold bulls, and you know who you are, you gold bugs. You guys think gold goes up all the time. I'm a huge bull on gold. I think we do go 10 grand an ounce. I really do. But it ain't today. There is only one time of the whole year. Can you see that? Can you see when the big money pushes gold? The rest of the year, it's basically sideways. There's not another big bias. This is the #1 time to trade gold. And I gave you this, guys, for 2 straight years. When I was with you guys last Black Friday, so we're year over year, I told you, you want to kick the new year off with a bang? Get ready for Netflix and get ready for gold. Watch what happens if I drop the best, if I drop the best period on gold and I turn it to 8 weeks. Ready? Look at that green line. 87% of the time, gold goes higher by 7% in 8 weeks. That's about 1% a week. That's only the average. When I showed you Netflix and it was up 30%, 83% of the time, that meant some years it could have been up 50%, which I showed you. Some years maybe it's up 10%, which I showed you. This is just the average. So if I take you, and by the way, one more thing, when you get into November and December, gold usually pulls back. Look at this. Look at gold over the next couple weeks. It dips, right? Check this out if I take you to gold. I'm going to take you back 7 years. Guys, 7 years, different presidents, you name it. Really quick, ready? Watch this. Look how gold, once we get into October, crashes. And then we get to January, pops the orange line. We go from 120 to 130. Almost a 10% gain. Next year, look how it dips into December. Dips, pops the orange line, 115, 125. Next year, look how they totally destroy gold into the end of the year. 113, 100, 10, 12% drop. We pop the orange line, 104, 121. 15% gain, triple digit option wins, and these are only 2-month trades. And you're not trusting me, it's just the data. This is the beauty. If I get run over by a reindeer this holiday season, you guys are fine. It's just data. Look at this. Look how it gets killed here. Massive drop in gold, 125 to 107. We pop the orange line, 114, 120. Next year, I mean, they're not going to keep doing this, right? Oh, there's the dip. January, we get to gold around 122. Before you know it, we're at 130. This time, gold was already above the orange line. If you waited to January, it was around 121, 127. And then how about last year when I was here with you guys for Black Friday? Was anybody here last Black Friday? Did you guys do the gold trade? Remember how gold was just oscillating lower? And I told you guys what? Here's my Christmas present to you. Jerome said he was here. This was my Christmas present to you guys. Hanukkah present, whatever you want to call it. Call it the gift of money. This thing pops the orange line on December 20th. Technically, it did it on the 19th. Watch this. Just to show you these options don't cost a fortune. I can go into Thinkorswim, type in GLD. I can take you back to December 20th, 2019, a March option. Hang on. Thinkorswim, what are you doing to me here? Let me just change it. Now, I think that froze. Let's go get a March option. There we go. It's gonna be like, it doesn't cost that much. It costs $2.76. So if I had a $5,000 trading account, this option cost $276. That's it. I think I could afford that if I had a $5,000 account. Just do one in a paper trading account. You ready? Let's zoom in. That was right here. Everybody in the world could have gotten in because the previous day it was already above the orange line. Immediately going into Christmas Eve, this thing started running. I was getting emails from our members, maybe it was from you, saying, oh my God, you literally just paid for all of my holiday stuff. By the time it was over, they were telling me my new pet name is Goldie. On January 6th, we're talking about 2.5 weeks, guys. These are not long-term trades. Look at the value on January 6th. I'm going to go analyze. I'm going to take the calendar to January 6th. That 140 long call that we paid $276 for that I gave you a year ago, told you to get ready a month in advance, is now worth $845. $276 is $845. If you did 10 contracts, $2,700 is now $8,400. So take 845, divide that by 276, and you're going to say, that was a 206% return. Better than a sharp stick in the eye. Ron, you're this amazing stock picker. No, I am not. All we do is we go to financial and we say, oh my God, look at that window. Now, I'll tell you all the stocks we watch all year long. That's not a problem because the members, they love it. They absolutely love it. One last stock and then I'm done. Already over on time. I told you guys I'm going to show you a stock that has 100% track record. The thing I didn't tell you on purpose is it even worked during COVID. You've got to be kidding me. The stock is Domino's. Look at Domino's. I love pizza and the size of my belly will tell you so. There is only one window I'm going to look to trade Domino's because the rest of the year, chop, 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 chop. This is the window. Where this gets better is as we can say, hey, financial, can you please show me the best time of the entire year to trade Domino's? You drop the window, 14 weeks. Way to look at that track record. DPZ has risen by an average of 20.86% during this 14-week period, with a track record of 100%. Domino's has been publicly traded 15 years. It's never once lost, and if I show you this track record, check this out. This is COVID. Look at this. This was the COVID striking. We started to get cities and states locking down. Flights were getting canceled overseas. As that happened, look how the stock began to pop above the orange line. On Valentine's Day in the US, February 14th, the stock closed above the orange line. While the lockdowns were happening, look what happened to the earnings report. Domino's has an earnings report in February. Over that window of time that I showed you with that green line, not even during COVID did it lose. I had people writing into me because I gave you this pick last year too. I set you up for basically the next 3 months with trade ideas. And you can do this for every stock you got. No more do you blindly go think about buying a stock. You got to go to financial and check, because if you were on the wrong end of this could have blew your entire account up. You could have lost everything. Instead, you were like, oh my God, COVID striking. We've never had a lockdown like this before. Look at the value on February 14th. And this is how you can make your year in a matter of a couple weeks. February 14th, COVID striking. Let's say we go out and we use a June option. A long call costs $15.40. Now, there's no way you're going to pay that because the bid-ask spreads are so wide. But let's just say you paid $15, so it's nice and easy. A $300 call for $15. That's $1,500 to buy one. Ready? Look at the value on the 20th. When that stock went from here to here. You were in here, now it's there. February 20th. That long call option at strike 300 is worth $77. And you knew about it, what, 2 months in advance, like I'm telling you now? You know what to watch for, and you sit back and wait and you shake your head and you just can't stop laughing. $1,500 was worth $7,700. People wrote in saying, Ron, I can't tell you what this has done. You've literally changed everything. I've never made so much money using options before. All because we know the window of what the big money's going to do. It's absolutely insane. So here's what I'm going to do. I'm over on time. I need to get you guys out of here. When our members, when people come to financial, once they see what happens, they start telling their friends. The only way you go tell a friend about us is if you're actually doing well, because otherwise you're going to look horrible. You would never do that to your friend. Bruce is like, I won 9 out of 12 trades. I'm like, yep, that should be the hit rate if you're doing 80, 90% trades. Monica says, I'm trading less and staying in trades longer while others are panicking. She goes, my trading accuracy has skyrocketed. I'm no longer wondering why the stock I picked didn't move. Bingo. That solves one of our biggest problems. Why is the stock that I buy never going anywhere? That all changes. And then Bob was here with us in August because I did an event for TradeThirsty. I told you about MasterCard, Intuit, and Salesforce. And he's like, this is amazing. So here's the deal. I've known Jeanette Hubert a long time. They've asked me to bring back the mother of all holiday specials. I did this for them last week. I'm doing it for today. There are no other events. There's no event this weekend yet. There is no event on Monday. This is the last time. It's the final deal. I am bringing back a price that I did 4 years ago. It's the mother of all holiday specials. You can thank Jeanette for it. The only catch, 50 packages. If you go to my website now, it's $17.88 a year. We have people paying this because it's worth every penny. The Jeanette special price, it's not $9.97, it's not $7.97, it's not even $4.97, which I did for you guys a year ago. This is the best ever, not once below it. It's $3.97 for a whole year. You must use the link on the screen. If you go to my website, you're going to be paying about 5 to 6 times this, 5 to 6 times this price. It's $3.97 a year. This is the final 50, and you're going to get grandfathered at this price too. You can take every stock you guys got, start typing them in and saying, oh my goodness, I thought about buying Netflix right now. Well, if you don't like money growing, buying Netflix is probably a good idea. If you like money to grow, not buying Netflix is a good idea. The big money is not there to support you. It's going nowhere on average for another month. Then fireworks. And I just showed you proof year after year after year. And with Disney. Now, you do get some bonuses. The first one is also a Jeanette special, where you will get a copy of my own hot stock list for the whole year. I share this with all the members, where you guys can see which stocks move throughout the year, month by month. You know what the end of December is, it's gold. You know January is Netflix. Adobe is January. I showed you guys stocks a week ago that some of them are up 10% already. And you know the value of that if you're trading options. But even just stock is incredible. Now, I'm going to have a member session. I was going to do it next week. It looks like we're going to do it tomorrow. I'm going to know more in about 2 hours. If we end up doing it tomorrow, which is what I'm thinking, you're going to get an email invitation this evening, and we'll do it tomorrow. Worst case, we're doing it Monday. I just need to find out from my wife if we're going anywhere tomorrow. If we're not, we're all getting together. I'm going to show you step by step how we get in and how we get out. You will be able to ask the members questions on the spot, and you'll be able to say, really this or really that, and they're going to be like, oh my God, yes. Because once you join us, if you use the site, you're not leaving. The price is $33 a month is what it comes down to. It should pay for itself immediately. That's the whole plan. You're also going to get a copy of my end of day exit system in a PDF and a video. There also is one other bonus. I do 1 or 2 live member sessions a month. These are completely free. You will not find it on the order page. I just do it as a free courtesy because I like it. It's my company. I like what I do. You can probably tell that with the way my voice goes. This is a lot of fun. You saw how Johnny liked what he does. It's a lot of fun. If you really love what you're doing, it's a lot of fun. So I throw these in for free. You don't have to watch them, but if you want to see me tell you which ones I think are the best, feel free to attend. You don't have to if you don't want to, but they're a free bonus. So, oops, come on, there it is. $397 for a whole year. There are some questions which I'm going to get to. Jerome says, best money I've ever spent. I thank you for that, Jerome. I appreciate that very much. Gotcha. Okay, so I'll hit these questions in a moment, but it's $397 for a whole year. Financial.com/thirsty. That is Jeanette's special link for you guys. And she asked me to give you the bonuses. You've already seen them. You're also going to get access to what you see on your screen. For me to show you everything in financial, I would need a couple hours, and I'm not kidding. You're getting what's called Platinum Access, which is everything I've shown you today, plus what's on the screen. The first 2 items we already did. We did search seasonality, which lets you type in each stock that you own, and then the screener, which is what you and I did at the beginning, where we found all the hot stocks for the weeks ahead. Keep in mind, guys, the only reason I come back is because these trade ideas work and you ask for me. If you all told Jeanette that I was some kind of shyster or, full of baloney, she would never bring me back. So y'all have to be happy for me to be here. I was here a week ago and told you guys which ones to watch. Did I really expect them to go up 10% in a week? They're even beating their yearly average. In August, they won. I was here in May and they won. I was here last November and they won. So now you saw them again. So that's what we did the first 2 bullet points. Now, the bullet points in red, here is the thing we haven't talked much about. You will get access to this too. If you go up and we go search and we go stock score, you can type in any stock symbol you want. And let's say you want to type in the SPY, the S&P 500. And by the way, let's do this. 52 weeks. So we have a full year's view. Our algorithm, stock score, remember, is fundamentals, technicals, which is the chart, sentiment, and seasonality. So it's 4 metrics all rolled up into one. We've been on a buy on the S&P since April 6th, when the S&P 500 ETF, the spiders, was at 250. Guys, we're at 360. Let me ask you this question. Have you been long the S&P for $100 on the spiders? It's like a 30% move. Yes or no? And I actually felt sort of good about it. When we're green, we go long. When we're red, we exit. The S&P gave an exit. Our stock score gave an exit when it was around, what, 290, 300? We dropped all the way to 220. You were never even part of that massive drop. So how well does stock score work? Let me scroll down. Check out this last bullet point right there. If you bought the S&P ETF the day the S&P ETF was created, you're up 463%. That's really good, and it's something to be proud of. If you only held the S&P when we rated it a buy and exited, no shorting, you just exit the position, you hit sell to close, you're up 863%. You're nearly up double. You're getting access to this too. Now, what if you type in something like Netflix? Sit down for this one. We scroll down. You bought Netflix on the first day it was publicly traded, 44,000%. Only using our stock score algorithm when it goes on a buy, you're up about 4x, 186,000%. Some stocks it's going to work great on, and some it won't. But you're going to know the moment you type that sucker in, and you're going to say, oh my God, is the value of stock score fantastic or what on my stock? So you get access to that. We have an income screener. This is really, really important. There are other companies out there that have just a covered call screener, and they sell it for 50, 100, 120 bucks a month. Guys, hang on. Your price is $33.08 a month for everything I've seen. I'm showing you, it's $397 for a whole year. You come to financial, you hit screen, you hit covered calls. You have a covered call screener built in for what other people are charging as a standalone service, and you're getting that thrown in too for $397 a year. We also have value investor stocks, which have Buffett style fundamentals. We have newsletters. We will send you trade ideas. We have watch lists where you can actually put your stock into the watch list. And this is really cool. You come up here, you hit watch list. For example, let's type in gold. You type in GLD, you hit enter, and it brings it down. You can put a calendar note that we will email you and say, hey, every year, don't forget about gold on December 20th. Because once we get to Christmas, it's kick back, grab the popcorn, and shake your head and say, oh my God, here it goes again. And the beauty of it is, we know that if we go to a chart, we don't blindly take anything just because it's bullish. We wait for it to get above the orange line. That is the litmus test. Once we get above it, then it's game on. Otherwise, we wait and watch. All right, so now I'm going to do questions because I don't want to keep Jeanette here too much longer. There is, remember, only one catch today. It's only 50. I heard that there was over 1,000 of you that registered because you maxed out the webinar room. There's hundreds of you here now. Only 50 people. You're getting the best price I've ever done. It's never been 1 penny cheaper. So you can thank Jeanette for this. It's her deal. $397 for the whole year. You get grandfathered in for life. The only thing I actually didn't say, dang it, I always forget. There is something even better yet that you're going to get. Here, let me do this. So there's, oops, hey, pen, get back here. Here's my pen. There's going to be a pop-up window after you get your first year. And it's going to say, would you like a second year for $297? This is something I tested a while back, and it was a big hit. So if you get the first year at $397, you can pick up a second year at $297. And remember, you always get grandfathered at that $397 price. Only catch, 50 people and we're done. So if the pop-up window did not appear for you after you joined us, just reply to any email and say, I want the second year. That's all you got to do. Just say, I want the second year and we'll process it for you. All right, now question time. Can I just do a sound check? Can you guys hear me okay? Someone just said my sound dropped. I want to make sure I'm still live. I should be good here. Yep, you're good. Okay, good, 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 good.
I can hear you just fine.
Hey, thank you, Jeanette.
Yes, sir.
Hey, Jeanette, I hope you heard that. I earned brownie points. I said you were 25.
Oops. I did. I accidentally turned my camera on. I did hear 25. I was as old as some stock or something. I don't know.
Well,
all I heard was 25, and I was like,
so I did lie by 1 year.
I was like, I'll take it. I'll take it.
Okay, she's 27, everybody, just so you know.
Youngest grandma alive.
All right, let me hit these questions. Let's see here. All right, Salvador, you're good. You're already a member. Fantastic. Uh, Mandy, can you check for ETFs? The answer is yes, you can. So as long as the stock has a corresponding ETF, for example, we also have Canadian data. So if you wanted to look at, let's say, country ETFs like Echo Whiskey Zebra, EWZ, which is Brazil, or EWA, which is Australia, or you wanted to look at the Swiss franc, FXF, Foxtrot, X-ray Foxtrot, you can look at anything in the US market as long as there's a corresponding symbol. In Canada, we actually have the .TOs. We're working on Australian data, but it's not there yet. So it's US and Canadian data. All right, let's see. What else do we got here? Can I buy today and start? Salvador, you'd have to. So if we hit number 50 today, the page will go to sold out. So Salvador, what we need to do is buy today. Now, if you're already a member, but you're on TradeThirsty's list, as long as you use that link, you're still going to get the price. And all that happens is it gets added on to your existing subscription. So if you're actually a member and you're here, thank you for coming. Geez whiz, that's amazing. We would just add it on to your current existing subscription. You don't lose any time. This is from George. So do we get alerts? The answer is depends. For trading alerts, the answer is no. So here's the deal. Guys, this is $397 a year. That's it. It's 33 bucks a month. The moment you join, this should pay for itself. That is my goal. It is this cheap for a reason. I want it in everybody's hands. When I first started trading 20 years ago, I had two grand in my name. I eventually got it up to 5 grand and I blew up my trading account. Then I blew it up again. I know what it's like not to have much extra money. We could easily charge, and we get people paying us $17.88, nearly 2 grand a year. I want it to be aggressive with the price so it starts helping more people trade better, faster. Now, on to the trade alerts. Here is my goal. I do not want you dependent on me. I'm very serious about this. If I'm always telling you when to get in and when to get out, you're not going to learn how to do this. So if I disappear, I get run over by a reindeer, or I fall dead tomorrow, you will all be fine. I'm going to show you the most important pieces of this. How to identify when the stocks enter their window. I'm going to show you where to get in. We're going to use examples. I'm going to show you where to get out. You will be left with no more questions. So if I do get run over tomorrow, one more time, you will all be fine. Now, with that said, I still do 1 or 2 live member webinars a month. That's basically almost every other week. Because we're in prime time, I am doing them every other week. So I come from the farm country of Pennsylvania, and they say you got to make hay when the sun shines. When I was with you guys and Jeanette in August, I warned you. I said, listen, we're going to do great over the summer. And we did. I said, but come November, it all changes. It's like a cornucopia of trade ideas. It's the mother lode. And the only mother lode bigger than that is mother lode 2, which starts January. So you guys listening to this now, you have a chance to get in, practice, follow what I'm doing in these live sessions so you're up to speed. If you're a quick learner, you'll be out of the gate right away. But you got a bunch. We're gonna have what? One next week. You're gonna have at least 3 member events before we get to January to get ready. And you can start doing this now so you're ready for next week. I already gave you Copart. You saw BCO, SBGI. So the learning curve is super easy. I am not the type of person that tries to make myself sound overly complicated, so you have to pay me to keep me around. It's the opposite. I don't want you following me because you're going to be self-sufficient before you know it. That's the point. Because we're using the stock's own track record as our secret weapon. There's no secret about that. All right. Reginald, what did you say? A mere week ago, I bought the program on a Disney call. It popped 500 bucks. The program's already paid for. Yeah, especially everybody that was here in August. You guys should be, man, proud as peacocks right now. When will you get your welcome credentials? The moment you join, these will be emailed to you. Yep, the moment you join. Reagan, I can't see. There it is. Okay, Reagan is telling me we are down to 19 spots, so that's pretty quick. My estimate is we're going to be done here in probably 5 minutes at the rate this is going. Do you guys have any more questions? Let me just pop out the question box. I'm sorry, I didn't see that. Reagan said we're down to 11. So we're about to enter single digits. Stanley, is this really your best price? Stanley, I've never once sold it for less than this. The price will go up after this. It is not going to stay $397. It's too cheap. Thank Jeanette for this one. What time am I going to have the webinar? All right, so here's what I'm thinking. I need to hear from my wife yet. She got back while I was in presentation. Once I figure out my schedule this evening, we will either have a members event on Saturday, which is tomorrow, the 28th, or it will be on Monday. I will know by probably 6 p.m. Eastern. In the next maybe 2 hours, I will know. You signing up today, you will get that invitation. And all the member webinars are recorded and they are emailed to you, so you have a copy of the replay. Hey, Reg, happy Thanksgiving to you. You betcha. All right, let me just see. Kevin, do you have any plans to add a % short stocks as a filter? Kevin, yes. So there is a whole bunch of stuff we're working on. We're looking, the answer is yes, and I don't have an ETA, but it is on the development board already. But I couldn't tell you when. Because whenever I do tell people when, it never happens because there's always tech issues. I'm like, how hard can it be? They're like, you don't understand. You don't do tech. I'm like, I don't do tech, but I am impatient. All right, SP, shoot me an email. We can help you with that. All right, Mark, if you wanted that second year and you didn't get it because you had a pop-up blocker enabled, just reply to an email and say, give it to me. Reagan says we're down to 5. I'm going to guess we're going to be done here in about 2-3 minutes. Any other questions? Jan, you have questions on options. Jan, I can show you how to trade options. It's not that hard. I can definitely do that. And we also have an ebook. So if you just joined us today, I have an ebook that talks about options. I can send you that this weekend too for free. We sell it for 37 bucks on Amazon. I'll give it to you free if you join. Now you're talking about paying 360 bucks for membership. Even better. Hey there, Dave. Will current members get the invite to the training? The answer is yes. So what's going to happen is either tomorrow or Monday, I will know shortly, we're going to have a members webinar. All current members and new members get invited. Y'all get to play together. So if you're new and you want to find out how this works, ask them some questions tomorrow. They'll tell you cold turkey how they're doing. Hey, that's another turkey reference. I'm on a roll. I had to get me some butter. Andy, okay, shoot me an email, Andy. I'll help you with that. Eddie, can you please talk about the stock score being between 55 and 66? Okay, this is a little complicated, but here's the gist of it. When we give a stock score its rating, what is actually most important is if it's on a buy or a sell. The number associated with the stock score is not the most important number. It's either buy or sell. That's number one. Now, when it comes to the actual stock score number, it goes between 1 and 99. Just because a stock score might have a score of 85, it could be really awesome, or it actually could be a contrarian indicator, where it would be, listen, the stock has never gotten this level, or every time the stock hits this score, there's always an imminent pullback. Therefore, if I erase these drawings, I'll show you what I mean. So let's go search stock score, and let me see, who could we type in? Let's type in Amazon. Hit enter. Amazon, the world killer. So let's scroll down and let's read the top. The score for Amazon is 67. Okay, 34% above its historic mean. And it infers risk is lower than normal. Then it says currently it's trading in the upper end of its range. And it also says the score is currently showing a higher than normal reading, suggesting risk levels may be somewhat lower than normal. Well, when you take those 3 bullet points, you're like, oh my God, what did it just say? I mean, it's telling you essentially being long Amazon is okay right now. There are no anomalies being detected. We're not seeing any warning signs. Or you can just come up here and say, hey, Amazon is green. I'm going to stay long. Isn't that a whole lot easier? But if you actually want to dig in, The stock score figure itself will tell you if 88 is bad, is 66 amazing. Some stock scores may never even get to 70, and that's not a problem. So we actually measure the stock score upon itself. All right, we're down to 2 spots, Reagan, am I right? You just wrote down 3 more people. All right, guys, I think I'm going to stop here. Jeanette's been awesome to let me go this long. Any final questions, please hit me up. I'll be happy to help. Let me put the slide back up here. It is financial.com/thirsty. That is your $397, mother of all best ever holiday super specials. You can call it the Jeanette special. She's the one that wanted it. She said, I want your best ever, period. All right, Reagan. So Reagan's telling me it looks like we have 1 left. I will stop here. If you are number 50, the page will go to sold out. It will not accept your order at that point. If you have any questions, please let me know. I hope this presentation gave you some insight into the power of just using raw data. No special sauce. I hit you between the eyes with pure data. No BS, no massaging of numbers in terms of, hey, this is what I think. This is my opinion. I hit you with facts. These stocks do certain things, certain times of the year that is indisputable. All we've done is calculate the data. And then I threw our algorithm on, which is our special sauce, which can help hopefully put you in an even better position and say, you know what? Some of these stocks, even though they're really, really good this year, there is something under the hood that's wrong. Maybe you want to skip it. Pick that one instead. So you get everything I showed you today. I wish you guys a wonderful holiday season. Hope you guys already had a great Thanksgiving. So happy Hanukkah, Merry Christmas. Jeanette, thank you for having me. I'm going to turn the mic back to you and just say thanks again. I really appreciate being here.